By now, everyone has heard about Trump's One Big Beautiful Bill, and now let's talk about how to take advantage of it. Let me make you some money by preparing you for 2026. Imagine this. You've got $1,500 to invest in 2026, and the financial landscape just shifted with Trump's new laws and executive orders. The rules of the game aren't the same anymore, and if you play it right, you can score way more than before. In this video, I'll break down how I'd split that $1,500 into Fundrise, Acorns, and Robinhood. And most importantly, how the new bills and executive orders actually supercharge these platforms. Stick around because I'm not just giving you numbers, I'm giving you the strategy that makes your money work harder under the new laws. Look, we are not in support of any political parties at Fourth Alo, though it's all about taking advantage of opportunities. And if you want to take advantage of any of these opportunities, check out the links in the description. Okay, here are the 3 big moves coming out of Trump's playbook that matter most for investors like us. Executive Order on Retirement Accounts. This opens the door for more flexibility in what retirement money can be invested in, beyond just mutual funds. Think real estate, alternative assets, and more. Tax cut extensions. Lower taxes, more money in your pocket. That means more leftover cash you can funnel into investments instead of handing it to the IRS. The Genius Act and push for digital innovation. This supports digital-first companies, financial tech, and growth in new markets. If you're invested in innovation, you're riding the wave instead of watching it pass by. This is what I would do if I want to double my $1,500. First stop. Fundrise with $400. Think of Fundrise as your ticket into real estate's VIP lounge without needing a millionaire's bank account. Why does this connect to Trump's new policies? Well, the executive order on retirement accounts means everyday investors can now access alternative assets like real estate within retirement plans. That's like getting the keys to a private neighborhood you were once locked out of. And here's the kicker. Real estate has always been the bedrock of wealth, like planting oak trees that grow sturdy no matter what season you're in. With Fundrise, your $400 isn't just sitting. It's building apartments, offices, and rental communities that generate long-term growth and appreciation. Next, I'd put $600 into Acorns. Why? Because Acorns is built around small, consistent investing. And that ties directly to the executive order expanding retirement account flexibility. Acorns is like a piggy bank that secretly goes to the gym. You drop in little amounts, and over time, it gets stronger, bulkier, and downright impressive thanks to compound interest. That executive order means more room for platforms like Acorns to grow your retirement savings in smarter ways. And the best part? You can automate weekly deposits. Just set it and forget it. Your money is quietly multiplying in the background, like planting seeds and letting the forest grow. Finally, I drop $500 into Robinhood. This is where the Genius Act and tax cut extensions really shine. The Genius Act encourages growth in digital-first companies and tech innovation, and Robinhood gives you access to buy into those very companies early. Think of Robinhood as your fishing pole in the digital ocean. Instead of hoping to catch a goldfish, you've got a shot at hooking whales, tech companies riding government-backed momentum. And here's my favorite move, target dividend-paying stocks and ETFs. Dividends are like little bonus checks companies send you. And when you reinvest them, it's like using those checks to buy more shares, a snowball rolling downhill, getting bigger and faster with every turn. Combine that with tax cuts giving you extra cash to reinvest, and Robinhood becomes a personal wealth machine. So why split it this way? $400 Fundrise, $600 Acorns, $500 Robinhood? Because each part of this portfolio is directly boosted by the new laws. Fundrise thrives from retirement flexibility and real estate advantages. Acorns benefits from retirement order changes and makes small contributions snowball. Robinhood shines under tax cuts and the Genius Act by tapping into digital innovation and dividend compounding. It's like building a 3-legged stool: real estate, automated savings, and tech investing. Each leg is sturdy on its own, but together they hold you steady for the long haul. So if you had $1,500 to invest in 2026 under Trump's new laws, how would you split it? Would you go heavier into real estate with Fundrise, play the long game with Acorns, or chase innovation and dividends with Robinhood? Drop your answer in the comments. I'll pin the best strategies so we can all learn from each other. And hey, if this gave you some new ideas, smash that like button, subscribe, and let's keep building wealth smarter, not harder.